the market is heading lower from here.
It's amazing. Last week, the Bank of International Settlements issued its 78th annual report, and the opening chapter of the report is the end of the unsustainable, referring to America's credit and debt problems. And they also made reference, Frank, to the dollar, and they said, if you take a look at the dollar's decline from 2001, so far it has been orderly, but I just wonder if at some point there is some event out of the blue, some thing that happens that nobody's even anticipating. Let's say 3 or 4 money center banks, 2 or 3 major brokerage firms collapse, Fannie and Freddie collapse. Most people don't realize our nation's banking system is a fractional reserve banking system.
Correct.
Yeah, banks are only supposed to keep 10 cents of capital behind everything that they have, and the money that they have at the Fed really isn't there. The Fed is loaning them money. And one congressman on the hearings on Thursday, I think, basically got wind in terms of what was coming. And what I saw these guys saying, both Paulson and Bernanke, is we got much bigger problems directly ahead of us, so that's why we're asking for these special authority to handle these crises. But one congressman said, look, you've opened the window to the banks with the TAF. You've opened the window to the broker-dealers, the investment banks, and you've loaned out half your balance sheet. What happens when you loan out the other half? Are you getting ready to monetize is the next thing? And I've never seen Bernanke go so quickly to squirm and avoid a question. But that's why I think that gold is going to skyrocket under this scenario, because the only thing left is monetization.
Jim, I'm afraid you're right. And on that score, I would have to say I really agree with you. I think what's been going through my mind, this is always a process. We all do our homework. We look around and, sometimes you try to put 2 and 2 together and come up with something that makes some sense. I agree with you. I think you could get to a point where, number one, we could see a stock market crash. I can tell you that the S&P this week gave a 4 to 4.5 year downside cycle projection, a target of about 1,090 to 1,150. That crossed the median offset line at about 1285, and so we would go back to the high of last October at 1576, measure at 1285, that's 291 points or 18.4%, and then we take that same 18.5% and we project it down off 1285, and that brings you down into that 1094 area. That projection was given. That's probably about an 80% probability at this stage of the game. So you're heading lower. I tend to think it's in Elliott terms we're heading into a third wave. Whether we do next week or whether we do that in 3 or 4 weeks is still up for debate. The S&P has really good price support at about 1224. The June lows of 2006 and July of 2006, if we breach below those 2 lows, and the equivalent level for the Dow Industrial Average is at about the 10,700 level. If that support breaks from the summer of 2006, then I'd say the odds are pretty good at that stage of the game that you're heading for a big waterfall collapse. And if we get into it, indeed, after trending down for a few days, some kind of a wide-range crash day, that's where the whole thing could really lock up. And you might actually see some kind of a real monetary crisis hit at that stage of the game. Now, if they monetize the problem, whenever the banks reopen and whenever the system gets back up and ready for business, what will be on the flip side of that would be a big wave of price inflation that would undoubtedly ripple through the economy for, probably years. We could be heading into a really incredibly important inflection point. I also would point out that it's not inconceivable that if the problem is bad enough and crippling enough that you could see a dollar devaluation in tandem with some kind of a bank holiday. I don't want to sound too negative, but people don't appreciate the vulnerabilities here when confidence is lost. And if confidence was lost to that degree, the dollar could fall very sharply, maybe on the international exchange rates, even if our markets are closed. So I'm very concerned. I think as far as investors go, the only way you can sort of sit back and be somewhat you can do 2 things. You can put your head in the sand and be an ostrich, or you can position some of your capital in the precious metals and use that as a protective hedge. Gold will always move up in a crisis like this and move up explosively. That's been his historic role. And to that extent, I think right now what people should be focusing on is bullion and the upside potential and purchasing power protection that bullion represents. I'm with you 100% on that, Jim, strongly.
Frank, I know you and I were planning on meeting at our militia meeting, but we're going to...
Oh, that's funny. No, I know. I mean, you wonder, you know. I mean,
I mean, what's next? Bomb shelters?
Easy to figure out what is next. We have peak oil. You know, so many problems that have hit all at one time. And, you know, to that extent, I can only tell you, it's like watching a tragedy. I've been writing the market wrap-up week in and week out, and, you know, I keep saying, you know, this is getting more and more difficult to chronicle this unfolding debacle, because it's really tragic, it's really sad. The simple fact of the matter is it didn't have to happen. We had a lot of greedy folks taking advantage on Wall Street, and now, unfortunately, the flip side of that is really coming home to roost.
Yeah, it's unfortunate, but the one thing that I think you're seeing resurface here, Frank, globally around the world, is gold is rising against every currency against the world. Oil is rising against every currency in the world. And I was just looking at some global inflation rates, even though ours is understated. So I couldn't agree more with you. Well, Frank, we'll see if we can get some food supplies down to you. Anything?
Thank you. I need a big shipment down here, Jim.
Okay, Frank. Well,
thanks so much.
Well, listen, if our listeners would like to get a hold of you, how they can do so?
They can drop me an email at frankbgst@aol.com, and we'll do our best to help them make some sense out of this mess.
All right, Frank. Stay cool down there, okay?
Have a great weekend, Jim.
And I think the IMF is correct on this circumstances. They say we're in worse shape since the Depression. And yet our government tells us there's not even a recession. This is utterly amazing. Ask the American people. Our government tells us inflation is 4%. Nobody believes that. I mean, just look at the cost of energy.
That's the familiar voice of former presidential candidate and current Congressman Dr. Ron Paul, talking about the fact that there's American blowback, something we'll discuss in the big picture today. The fact that Main Street is losing faith in everything that the government and the Fed are telling them, and it only stands to get worse in the future. It is sort of an irony that everything Dr. Paul has been warning about for the last 20 years is now coming to pass.